A local earnings season is heating up as JSE-listed corporations open their books, giving an account of the year that was. AECI is no exception. The Chemicals and Explosives Group posted a 5.4% increase in revenue, but headline earnings per share dropped by almost 12%. AECI CEO Holger Riemensperger joins us now for a detailed look into the group's annual numbers. Thank you so much for your time, Holger. Now, I want to start off with the good news. So records are always welcome in this type of environment. And AECI Mining achieved a new EBIT record. Talk to me about, how that achievement was reached.
Yeah, actually, we achieved not only an all-time EBIT record, also an all-time free cash flow record and an all-time growth record of our international business. So we are very, very proud about the achievement. So yeah, actually, our strategic growth plan is playing out. So the growth we are seeing in the business is predominantly coming from outside of South Africa. Also outside Africa, specifically Australia, Indonesia, in a very nice growth momentum for us, continue actually to say, even looking great going forward. And Central Africa, Western Africa grows, very nice growth, and defending our market share in South Africa. That wraps it basically up.
Yeah, well, actually just looking at that revenue growth not translating down to your headline earnings per share. That's really not a new story. We've been seeing a number of companies that have been reporting revenue growth and then reporting a decline in the bottom line. Specifically for AECI, what were the pain points here? I feel like you've mentioned the South African macroeconomic story as well.
Yeah, first I would say that our revenue depends a lot on our key input raw material, ammonia, which was at a pretty much a peak a year ago and declining. So, but that does not impact our margins. So our margins are actually pretty stable, even growing. The growth rather comes from the international businesses, as the margins outside South Africa are much better in average. So yeah, that actually is why it doesn't exactly translate as you would expect. But indeed, we had some smaller struggles also in the mining business, not too much from the logistical constraints in the country that prevented probably a better result for our local business. But all in, we are still very happy.
All right. Well, there was also a significant spike in finance costs during the period. In what position is your debt picture in?
Actually, we about half year ago, in the half-year results last year, we were still at too high levels of debts and gearing at the 45%. We have reduced that in the second half of the year to 35%. So we have returned 1 billion of debts. But as the interest rates continue to stay elevated, that impacts. We have reduced our working capital, which was the main contribution to the reduction in debt, from 19 to 15%. In mining, even better, down to 13%. So we could basically pay back debts, but due to the elevated interest rate, that still weighs into our hips.
Well, actually talk to me about that reduction of working capital. What story is this saying, and how comfortable are you with the levels of working capital that you are seeing now?
Yeah, we are very comfortable. There are some, let's say, specific effects that are not always playing, because I just mentioned that our ammonia price levels came down. That, of course, returns some cash as we're going now in the down cycle in the price. Again, not affecting the business, but just helping to bring back cash. We have reduced our payables, we have reduced working capital, actually that is pretty sustainable. But we need to continue working on making that new working capital level more sustainable going forward.
All right. Well, let's talk about the restructuring. Would you say that, because obviously that restructuring is all about bringing the business back to its core businesses and also reorganizing the chemicals business, would you say that all the focus now is directed at mining?
Well, we have put mining very concretely into the center of everything we do. So, and that means concrete that all our growth capex and most of our efforts, if it comes to growth, go into mining. That's the main focus. Our chemicals business, it is a very local South African business. We run that practically for cash. So we are not intending to grow that. We try to take more synergies out and bring that into the mining growth. But yeah, the growth is really coming from the mining. And the chemicals, like I said, very local business. That business suffered a bit more from the macroeconomics of the country because of a reduced demand in general that brought the revenues down, also the profits. But we have been able to triple actually the cash generation of the business.
All right. And just lastly, as we wrap up, of course, looking at the growth story in terms of geographical growth, you have mentioned that because you don't have a lot of market share outside of South Africa, so you see more upside in that. What are the specific markets that you are keen on?
Actually, we are looking predominantly to 3 geographies that we want to grow. So we continue to build on the momentum that we have created in Australia and Asia Pacific. So we have one nice project there, complicated jobs with nice margins. And then what we are having in the books for this year is further penetration of South America. We have made a small acquisition last year in Brazil. We are eyeing to penetrate other countries there as well. And then North America, we want to put our foot onto North America, either the US or Canada. Before end of the year, we hope that we can announce something there. That's our 3 geographies. And the reason, just to say that those are the regions where we see largest growth and most sustainable growth going forward. We say electricity transformation matters. You find those in those geographies, and that's why we focus there.
All right. Well, thank you so much for your time, just giving us more insight into those numbers and outlining the strategy going forward. Appreciated, Holger. That was AECI CEO Holger Riemensperger.